this short video. I want to thank you for your interest in this important topic. We hope you find value in it. So let's get started. Better bond options. All right, so probably you have a similar portfolio holding. Equities, 60%, and we know that they go up, they go down, there's risk, and then our bond portion is 40%. That could be e-certificates or a fund. So why do we hold bonds? Well, meet Harry. In 1952, economist Harry Markowitz introduced the modern portfolio theory, fancy way of saying asset diversification. Now, the conventional wisdom for having bonds is that stocks go down, you find safety in bonds. So you assume to have an inverse relationship with each other, offset potential losses from your equities. So we can say that we have bonds for the protection and growth aspect. So let's take a closer look. What are bonds? You buy a bond, you're lending money to the issuer. In return, a promise for interest and repayment of principal. Simply, bonds are loans. Well, how well do bonds protect your asset? Interest rate risks, inflation risks, market risks, credit risk, liquidity risk, call risk, all of these risks that bonds can face. So let's talk about Greece, Mexico, New York State, Detroit, Michigan, York County, Pennsylvania, General Motors, Chrysler. You can go on and on. All have either defaulted or are seeking a bailout. And even risks with misleading ratings, just read the recent USA article, 2008 crisis still hangs over credit rating firms. The long or the short, bonds have risks. Well, how well do bonds provide growth? Current U.S. Treasury bond yields, which, by the way, is the safest, they're investment-grade bonds. A 10-year is at 1.22, and a 30-year, 1.86. Unfortunately, very low returns. How well do bonds provide income? Well, income comes from the coupon rate until maturity or if it defaults, and then it needs to be replaced. But here's the thing, nobody knows what the economic conditions will look like in the future. Costs for new bonds, unknown, or what will the coupon rates be that are available? Unknown. So again, uncertainty in income. So back to our portfolio that many of us hold. From what we've just learned, where is your retirement protection? 100% of your assets are at risk. So the original intent of holding bonds was for protection and growth, but what we've just learned that it's not necessarily true. So how is this helping to diversify your portfolio and meet your retirement needs? Well, where do we go wrong? Well, we assume, and when we assume, we simply accept what I've always done, my advisor's advice, the target date fund track we're on, what Wall Street tells us. So how do we start correcting this? It starts with the person who is ultimately responsible for managing your money. And no, I'm not talking about your advisor. I'm talking about you. And that's something to smile about because right now you have the power to change course and better position your retirement planning. So let's see what this new direction could look like. This is a better bond option for asset protection and growth opportunity by simply using your current bond portion. If markets go down, your money is protected from market losses, guaranteed. And if market goes up, guess what? Your money captures some of the market gains. So let's look at an example. Assuming $100,000 as our bond portion at 3%, and usually these options track between 3 or 6, so we're going at the low end, very conservative. Over 10 years, that's $138,000 and change. So true diversification, not all your eggs are in one basket, a risk basket, and there's principal protection and there's growth. So in this option, planning for guaranteed lifetime income is what we're going to look at, again, by simply using your current bond portion. Now, most are in some sort of market-based withdrawal strategies, 4% withdrawal, bucket strategy, a bond strategy, that are dependent on what the market does or doesn't do. So this means no certainty. So let's look at a better income option. Here's our income line, and we're driving now guaranteed lifetime income, and you could even put your spouse on it to protect both lives. So here's an example. Same $100,000. Right now there is a withdrawal rate of 11.62%, which will give you an annual guaranteed lifetime income of $11,620. True diversification, income you can't outlive. Learn about your options now. Request your free report. Now there's going to be a pop-up. Click on the Act Now button to request your report. No obligation. It's free. It'll give you great intel on this option and how it may work for you. This brings us to the end of our video. Thanks for watching.